Our business model is largely defined by state law, Maryland state law. It requires us to provide inmates with work skills and work ethics to enhance their employability upon release, to reduce prison idleness, to provide a quality product and service, and to be self-sufficient. So the self-sufficiency part is indeed very critical to us. Without it, obviously, we don't receive any general fund dollars. Maryland law also, as far as the model, defines our market. It restricts it basically to government and nonprofit organizations. So we sell to those folks exclusively, and we got to make sure, obviously, that that we maintain the self-sufficiency. We have basically two sides to MCE, the business side and the teaching side. We have to be successful on the business side as far as self-sufficiency, or we will not be able to be successful on our other side, which is the teaching side of the inmates. So consequently, we put a tremendous amount of effort to aggressively pursue sales so that we can generate the revenues to put the inmates to work, to provide them with the needed work skills and work ethics. Okay, in several ways, really, we determine our return on investment. As far as items like equipment and vehicles and machinery, well, we crank the math like everything else, is what dollar outlay that we will have and what revenue we project to get in and how long it will take to recoup that investment. We also look at it as far as return on investment on the people side, our inmates, as far as that program that we are developing, will it give them that needed work skill, or more importantly, quite frankly, that work ethic that will allow them to return to society as a liability, not a liability, but as a productive citizen. Being in a government organization, we have to prepare budgets that have to be approved by the legislature. That process starts with a forecast of revenues and expenditures. The revenues are based upon historical information as well as known information. If we're aware of certain projects that will occur that we will be involved in, the example would be construction of a building for a state college, perhaps. We, as part of our business plan, we assign revenue goals. We also assign profit goals to each of the business units that we have. Those are then, we generate financial statements, and our senior management reviews the financial statements for each business unit on a monthly basis. And then items that are looked at are obviously indeed revenues. Are they meeting their sales goal, their bottom line goal? And criteria utilized to analyze those are items like raw material usage rates, indirect and direct labor cost, fixed cost, variable cost, etc. So all of those items are looked at monthly, and corrective action taken is necessary if someone's not meeting one of the numbers. As part of our business plan, we're required to report all that information quarterly to the governor's staff. So we do that on a quarterly basis. Inventory management and control plays a critical, important role in self-sufficiency, because it accounts for the accountability of all your items, all your raw materials, your finished goods, your component parts. You need to know where they're at all times and what their value is. You have the accountability. Your inventory system has to allow you to have the knowledge of where all your assets are, as far as what warehouses are in, what state they're in, as far as raw material, finished goods, component part, etc. Inventory system also allows you to determine your standard costs for your products. You obviously need to know what your products cost you, so you know how to sell them at what selling price to be. So in the standard cost, the normal standard cost policy, as far as all the raw material costs, overhead costs, and indirect and direct labor costs consist of the standard cost project together. Okay, concerning audits, we do largely two on an annual basis. One of them is an asset audit as far as machinery and equipment, vehicles, and the like. It's hands-on. If items are missing or stolen, they are investigated promptly. We haven't largely had any problems in that area. When we do have an issue, it's largely ones with the asset was transferred from one factory to the next, and the plant manager didn't do the right paperwork. So it's actually hands-on. Everything is physically counted at least once a year, all of those type of assets. Inventory as well is done once a year in addition to some monthly cycle counts on certain products. Basically, at the end of the fiscal year in Maryland, our plants are basically shut down for the last week of June. And the staff and the inmates count all the raw materials, all the component parts, and then we have headquarters staff as well as private sector accounting staff that go in and do recounts. Then the inventory system is then reconciled with our perpetual records and any variances investigated.